What's up, everyone? All right, Ross here from Warrior Trading, and I'm back for another month in review. This is February, $85,000 in total profit. Ended up being a good month. I was pretty happy with it. Could have been a little better. I've got the calendar up here. I had 2, 4, 6 red days, 2, 4, 6, 8, 10, 11 green days. So that, could have been a little bit better ratio there. I usually wouldn't mind like 1 red day a week. So 6 red days is a little higher, but overall, not bad. $85,000, and I had 2 phenomenal days. I had one day where I was actually up just about $100,000, and I tried to go for that final trade to jump me up over 100. Gave back a little profit, finished up 65,000. The next day I made 50,000. So in 2 days, over $100,000 in profit. That was awesome. This is probably a good time for me to tell you that my results are not typical. Most beginner traders do lose money, so please take it with a grain of salt. And as a beginner trader, you should trade in a simulator before you put real money on the line. If you're a new viewer on the channel, I hope you hit the thumbs up and subscribe. 2 exciting things. One, when we cross over 1 million subscribers, I'm going to do a new small account challenge. So my account right now has got $700,000 in it. I've got a fairly big account. I'm going to start over with a new small account challenge when we cross 1 million subscribers. And every morning, Monday through Friday, I do a live day trading morning show where I give you a little bit of a preview of my watch list. And sometimes I'll take a few trades during the morning show, and then I'll stream the rest of the day just for traders over at Warrior Trading. So make sure you subscribe and click the notifications bell. So when I go live each morning for the morning show, you get the notification and you can tune in. All right, so let's jump into it. Let's review February. $85,000 in profit, month in review. All right, everyone. Well, here we go. It was quite the month. $85,000 to finish the month, but not clean. I had a very slow start to the month, which was partly because I had come off kind of a rough month in January. So, sort of a slow start, a red day here. I took the day off on my birthday this year, learned the lesson from last year where I lost $275,000 on my birthday. Did not want to repeat that. So I took the day off on my birthday, was out on Monday, came back Tuesday, red day 11,000, red on the month. Recovered by the end of the week, finished the week green, going into the second week, green, and then 2 big red days, down 30 grand in 2 days. Recovered with the 2 best days of the year so far. And on this day, 116 trades. I was up over almost $100,000. I hit 90,000. I went for those final trades to get myself up over 100, gave back a little profit off the top. But still, 65,000 is a great day, 50,000 on that Friday. And those 2 days made my month. Ended up finishing the 4th week red, and then a small green day to finish the month. So if we look at the equity curve, it's like little profit, 2 big red days, 2 huge green days, and then started to give it back. And I gave back, 20%, 30% off the top, which is annoying. If we look back to the month of January, you'll see that my 60-day equity curve is quite a mountain range. It's up, it's down, it's back up, it's steep up, and then back down again. I can't seem to get it just nice and steady. But if we went back, 90 days or something like that, it doesn't look as bad relatively. I'm just in a little bit of a stretch here that's been a little slower, which is never fun, but is certainly part of trading. And so if we look at the calendar for February, obviously these 2 big days were, that was where I crushed it, and the stock was ISPO and ANGH. So I'll pull up those charts for you so you can see them. Pretty epic. ANGH was the Sympathy stock. ISPO was the primary momentum stock. Son of a gun, this thing, it was crazy. So at pre-market, it went from $12 to $30 in one candle on very light volume. And this was a recent IPO stock. So recent IPO, oops, let me move this down. Let's see. There we go, subchart. All right, so recent IPO stock, and it goes crazy. Now, one of the things that's interesting about recent IPOs, it's a setup that I've traded for a long time. It's a setup that I've taught as part of the Warrior Pro momentum strategy. It is a powerful setup for a couple reasons. Number one, usually when a company does its initial public offering and they sell shares onto the market, there's a lockout period where they cannot sell. So, a lot of times an IPO will give an insider the opportunity to cash out, right? They can raise money, but they can also cash out. There's people that'll happily buy their shares at a premium. So it's very common at a certain point during an IPO and after an IPO that you do see a period of selling. You saw it on Facebook. For sure, there were a lot of people that were happy to take profits. You go back like this was then the Facebook IPO was actually pretty dreadful, but you had this, and part of it was because it was probably overpriced. Anyways, it pulls back for a while, and it took like a year for it to kind of rally back up. Twitter was sort of similar. This is a very common story. IPOs, a bit of a pullback before a rally. So this recovered faster. But in any case, so ISPO, recent IPO setup. So typically insiders are not going to be able to sell. There's a quiet period and a lockout period. So that's number one. That's going to create, and these are sort of, we're talking about the scales a little bit of supply and demand. So when you have more sellers, that's going to create more supply, and you require a higher level of demand to overcome it. So on the sell side, we don't have insiders selling shares. We do not have a high likelihood of a secondary offering within a week of a public offering, or a stock merging into an IPO or merging into its initial trading, if it's a merger or a SPAC. So you're not likely going to have a shelf registration, which is an S3. That's more getting into its technicals, but you're not likely to see a secondary offering. When you have a stock that's been beaten up for a long time, secondary offerings are a real concern. A stock that's been beaten up for a long time that's starting to just kind of curl off the low. This one, actually, this one's not even really that beaten up. But in any case, this was actually a recent IPO stock as well at the time, right? Same setup as it turns out. But I was thinking about it now, a couple years later. So like down in this area, if on a day where it's popping up down here, now you're a couple years after the IPO, you do start to have the risk of the company doing a secondary offering, selling more shares onto the market to raise money, selling more shares, increasing supply, again, diluting the value of the stock. That's not good for momentum. But on ISPO, this one, of course, gave us a pretty huge move. So a couple other things on recent IPOs. Often they can be really hard to find shares available to borrow. At one point, I found shares available to borrow on this, and to borrow 10,000 shares would have cost me $6,500. It would have cost $6,500 just in borrowing fees to borrow 10,000 shares. So that's astronomically expensive, and it's gonna basically make short selling very difficult. So all of that can lead to a parabolic situation, and that's what you ended up getting here. This stock went from the previous day, $12, all the way up to $108. It was incredible, and I had a beautiful trade through this area here. This trade is right now live on YouTube. Let's see, and I'll give you the link here. We'll put the video up in the corner here so you guys can check it out, but this one is live on YouTube. It was posted, let's see. So it was, where was this? Well, it was posted on the day that I took that trade. Here you go. Okay, so $78,000. So that was right there. And 51,000 was the next day. So check out those two morning shows if you haven't already. So that's a live morning show where I was actually trading during the show, and I ran the live morning show a little bit longer. So again, if you're not already subscribed to the channel, if you're a new viewer, make sure you hit the subscribe button, because I do my morning show every morning, and sometimes when we've got some really great action like that, I'll stream a little longer because it's something pretty special. So I was trading it in this area here, and we got the move back through the high, first pullback, squeeze higher, pull back, squeeze higher, halt down, rips back up all the way to 108. Incredible. Now, what was interesting, and this is very common, is we started getting sympathy momentum, and we got sympathy momentum on ANGH. I wasn't really expecting it initially. I sort of said, I don't know. I'm not sure if this one's going to really be the one. It popped up here. It halted up. It went to 14 and then it pulled back. And then in the afternoon, it went all the way up to $34 a share. So why was ANGH sympathy momentum? ANGH was also a recent IPO. So was SkyH. SkyH was another one that was a recent IPO that's actually continued into March. There were several others. I can't remember all of them now off the top of my head, but ISPO and ANGH were the leaders. But both of them came back down, and ISPO is back down at $9, which is a good reminder if you're day trading these types of stocks that we're day trading, we're buying and selling, we're trading. We're not wanting to marry these stocks. We're not wanting to hold them in our retirement accounts for the next 6 years. These are not large cap stocks like Facebook or Twitter or whatever. These are small cap companies that have a short-term imbalance in supply and demand and have these bursts of momentum. And this type of volatility can present opportunities for active traders. And it's your choice whether or not you want to try to capitalize on them. So we did get some nice opportunities on this one. And that really, that changed my entire month. I mean, those 2 days were basically all the profit from the month. And the rest of the month was kind of like, a net loss. If you think of it that way, all of my profit on the month came from 2 days and basically from 2 stocks. And that almost makes me rethink my approach of trading every day, because all of this was just a grind. The problem is, you could say, and sometimes I think this, well, what if I actually have the willingness to sit on the sidelines and to not trade if something doesn't really look good? Well, at the beginning on ISPO, when I first started trading it, I wasn't really super into it because the spreads were big and the volume was light. And so I traded it with really small share size. And then next thing I know, with 500 shares, I ended up being up $3,500, $4,500. And then next thing I knew, I was up 10,000. I was like, wow, okay, now I'm getting a cushion. If I hadn't been in my regular routine of just sort of, actively trading whatever was moving and waiting for it to be really good, by the time it looked good, would have been too extended to even trust it. And then, yes, I could have waited and taken this pullback in this area, maybe. But even at that time, I don't know if I would have felt confident because it was still up so much. So, and it was extended. So, trading every day has its pros and cons. The pro is that you're in the market every day. If something starts moving, you're going to see it. Sometimes when things start to open up, or when, a stock is first on the scans, it's not that interesting and you have a couple base hits on it. And then all of a sudden, someone's getting squeezed out to the short side, or there's someone out there trying to buy a huge position. And next thing you know, it's up 40%, 50%. Son of a gun, it's up 100%. Wow, this thing keeps going. It's up 200%. So it's not always clear, like if I was going to set an alarm to only notify me, like if something was, I don't know what that line would even be. The stock that I traded today I started trading it at like 50% gain. It went up to like 110. And then it topped out there and came back down. It didn't continue higher. So, you could say, oh, I'm not going to trade unless it's up at least 100%. Well, sometimes that works. And then sometimes 100% is where it tops out and you miss the whole move from 50% to 100. So it's hard to say, but I do find myself, so this is what I find myself struggling with. And I'll go on split screen for a second here. So what I struggle with is the fact that at the very beginning of a move, and in any market, I'm going to use this analogy. I'm thinking of my dog, June, who chases squirrels and chipmunks and rabbits, and she'll chase anything that's running. And as a momentum trader, you train yourself to chase. And that's because momentum trading is buy high, sell higher. For intraday trading, it's a great strategy that I really like. Yes, buy low, sell high works if you're Warren Buffett and you can hold something for a few years. But in the context of one day or even an hour, there's not enough time to buy low, sell high. I mean, you could buy maybe off support, but even then you're still buying high. It's up a lot. It's above the volume weighted average price, it's extended, all of those types of things. So the challenge that I have is that when something starts squeezing, when something starts moving, it's like seeing a chipmunk. Immediately, very quickly, I need to make a decision that's partly intuition and is a little bit of impulse. There needs to be a quick grab, a quick jump. And the problem is, in a cold market, what we often see are these false starts. Something starts to open up and then it doesn't follow through. The volume just kind of disappears and then it just drops. And that's the pop and drop. It pops and then drops. And sometimes it ends up lower than before it even started. You now have short sellers that are coming in and aggressively shorting anything that pops up. And what's really challenging is keeping the presence of mind of what's the condition of the overall market, because it's not something that you are seeing in the moment when that chipmunk is popping up. So like for June, for girl, that chipmunk starts to run, she's not going to have, in that moment, she's not going to be able to hold that greater sense of, is the deck icy right now? Did it snow and rain last night? Or, is it whatever? I mean, she's so hyper focused. And I think an attribute of a lot of successful traders is an ability to be hyper focused, to sometimes not be thinking about the risk of a trade. I mean, you have to be mindful of it, but yet when you're really being aggressive, you've got to be like in there, you've got to be trading, and you can't get yourself scared. It'd be like, walking a tightrope. If you start just freaking yourself out and overthinking, you've got to be super focused on your task at hand. And when we're in a cold market, I find myself jumping and then getting smoked, jumping, getting smoked, jumping, and getting smoked. And it's hard for me to slow myself down. And because those attributes and that strategy and that willingness to be that aggressive pays me so well when the market is hot, I'm hesitant to throttle it back. Things that I could do that I've thought about, I could take money out of my account. Well, but then what about the 2 days when we have something that's opening up and I need the money there? Those 2 days changed my whole month. Sometimes, and so here's something I actually did do. On the 16th, I emailed my broker and I said, cap my max position size at 15,001 share. Because I don't want to take big size. I'm getting frustrated. I just am frustrated. So they're like, okay, fine. So these 2 days, I made that profit with not more than 15,000 shares in any one position. But the fact is, that didn't really make a difference on that day because the stock was ISPO. It was so expensive. I wasn't even able to take positions that big. The spreads were big and everything else. So I didn't even trade. 15,000 was my cap, but I didn't even trade that. When you have something that's lower price, like we had this one here today, let's see, 1 minute, 15,000 shares, 15,000 shares isn't enough on something like this. What's this doing? 24-hour. So on this one, this is a $2-3 stock. And this right here is a move from 367 up to 420. I want to be able to buy more than 15,000 shares. So then the other thing that someone had mentioned is, I said, well, what if you limit your buying power? Cap your buying power at $100,000. That would still allow you to take 40,000 shares of something like this, or 30,000, whatever, 25,000 maybe. But it would, keep your share size a little bit smaller on something like ISPO. You'd only be able to take maybe 2,000 shares when it was lower, and then maybe 1,000 as it gets higher. And that's not a bad idea. And then of course, if something is really, really opening up, you could always email your broker on that day and say, hey, can you lift the restriction? Today's the day where I want to go big. Because what I find myself doing is I see something starting to open up. And even though I know that I've maybe said, don't trade more than 15,000 shares, I'll just lift that limit because I'm seeing this and I'm like, let's go. It's time. And then when I get smoked, I'm sitting there thinking, man, what's the deal? In that moment, I was so hyper focused. I just went all in, and then I I got smoked, and the market wasn't hot enough yet. Why did I do that? So that's left me feeling sort of like a little frustrated with myself because I have tuned my trading to be so aggressive. And, I mean, I can't say it hasn't paid really well, but when the market is choppier, it's been difficult. And so with, the overall market, the S&P 500, with everything that's, kind of been going on here, we've had this fairly substantial pullback. We're below the 200 moving average. This is sort of bear market territory. Now, maybe, end of March, we end up getting back above the 200. That would be great. But, it depends a lot on things that are happening in the, global world. And I don't know what's going to happen. So if we stay in a bear market and it continues to be cold, I'm going to have to throttle it back a little bit and either be willing to sit on the sidelines until something like this sets up and then get aggressive, or be willing to just trade with smaller share size kind of across the board until something is up more than X% and then start to size up. I don't know. It really is difficult for me. I'm not sure the answer because it feels just so counterintuitive, and I'm trying to scale my strategy. I'm trying to be aggressive. I'm trying to go big, and the market just is not supporting that right now. So, the fact is, at the end of February, I was at about 112,000 on the year. If you compare that to 2020, at that same period, I was at 66,000. You compare it to 2019, I was at, 2019, I was at 133,000. 2018, I was at 100,000. So, and I'm excluding 2021. Why? Well, because I was at 1.2 million. And I don't really need to see that because I know that was because of GameStop. So that was an anomaly. That was awesome, but that was 2021. That's not going to be the norm every year. So 2022, I'm basically kind of right back on track to what I would have been in 2019, 2020, 2018, if we, during years where you don't have GameStop. So that makes me feel a little bit better. At the same time, I honestly think that I could make more money if I could take my foot off the gas sooner on days where I'm spinning out, on days where I'm not trading well. Like the second I'm down $5,000 on the first trade, like, is that the cue just to say, all right, that's it, I'm stopping there? And I've thought about doing that. I've thought about setting max loss on my account at like $1,000 or $5,000. So, if I'm below that, I can't take any more trades. I do have a max loss set right now at, I think, 30,000. And I have my max share size right now set at 50,000 shares. So those are both giving me a little bit more room. And that's not always a good thing, especially not in this market. But on a stock like PIK, I needed to take 50,000 shares, 40,000 shares to make good money because it doesn't have a huge range. It's a cheap stock. So I needed to be able to do that. I had a good day today, which is fine. And this was a fine chart. So nothing wrong with these trades here, but I needed the position size. The problem is, can you restrain yourself to not use it on the choppy stocks? And it's hard. It's really, really hard. So anyways, February ended relatively well. Profit loss ratio was not as good as I would have liked. I had the biggest, $38,000 loss was bigger than my $20,000 biggest winner. 67% accuracy. Well, actually, this is through the whole year, but even if we look just at February, it's not going to be that much better. So it's a little bit better, but not that much. So yeah, I've got a little work to do, but the good news is I'm building a cushion, slow and steady. My initial goals for the year, since last year I did 3.8 million, I sort of thought if I can do 200,000 a month, 2.5 million is within reach. And I was doing about 200,000 a month during most of my slow months last year. So I thought, yeah, let's set the goal a little low at, 2.5 million. I think you could probably do that because this was last year. This was a slow month at 167,000. Well, all of a sudden, 43,000 was my worst month last year, and I've already in 2021 or 2022, I've already kind of set new lows in terms of like being up only 25,000 in January and then being up only 86 in February. So now I'm starting to think, well, shoot, what is my goal for the year? Do I just take off these 2 months that I should have hit 200, and so instead of 2.4, have my goal at 2 million, and then hopefully I get back to 200 for the rest of the year? Or should I be just scaling the whole thing down and saying, well, I might only do 50,000 a month average, and maybe I'm only going to do 600,000 this year? And so I guess the question that a student asked me, is one of our students had a phenomenal year last year and was saying, I don't know, I'm feeling kind of anxious because I don't know if I'm going to be able to do as well this year. I don't know if we're going to have another GameStop. I just don't know. And I feel like I really want to do well. I'd like to have another really great year, but it's out of my control, to a large extent. Is the market going to be hot or is it going to be cold? And I don't know. And so I sort of said, well, try asking yourself this question. If you make a quarter of what you made last year, could you possibly still say that it was a good year? And if I make a quarter of what I made last year, if I make $1 million this year instead of 4 million approximately, could I still say this was a good year? And the answer is yes. I could say it was a good year. Was it a slower year? Sure. Was it a sustained bear market through the whole year? If I only make $1 million, then that may be the case. But that's part of trading. You get through it and you get to the other side. And you want to be here for the next hot streak, because when things open up like they did the last 2 years, you want to make sure you're able to capitalize on it. So that means that some months, some years are going to kind of just be a wash. I hope that there won't be a full year that's a wash. That would be disappointing. I mean, it would be for sure. But I can have a few months that are a wash. That's okay. And I can have a year where maybe I'm making 6 figures, mid to high 6 figures, 500 to 700,000. And I can be okay with that. So if you can be okay with it, then it starts to take the pressure off, right? You're okay with that. So there's no pressure. It's when you start saying, I'm not going to be okay with anything less than 3.8 million, that now you're putting yourself in a pressure cooker where you either hit 3.8 million, same as last year, or you're going to be not okay with how you did. And that's putting a lot of pressure on yourself. But this is sort of a performance sport. So like professional athletes, we always feel we're only as good as our last game, our last year. And we're on sports have seasons. So, we're on a tax year. So we know what our 1099 was for the last year. And, we have a goal this year of hitting that number. I mean, naturally, we want to keep doing well. And if you have a sustained period where you're making less and less and less, you're going to start to feel a little bit of insecurity. So one of the things that I am a big advocate of is living within your means and saving as much as you can, trading as much as you can in a retirement, reinvesting that retirement into long-term accounts so you can position yourself with multiple sources of revenue. Whether you're reinvesting for real estate, or you're reinvesting by starting your own business, or you're reinvesting in dividend-paying stocks, the fact that you're reinvesting and creating second, third, and fourth revenue streams, that is the very best thing that you can do with profits that come from trading. It's the very best thing that you can do. And you know what the very worst thing you can do is? Spend all that money on expensive cars and private jets and stuff like that. Now, I'm not saying it's not okay to spend some money, because you should. Life is short. You You should spend some money. You should enjoy if you've worked hard and had some success, but there has to be a balance. And I think because trading inherently is going to create a little bit more insecurity because you're essentially self-employed, it makes sense to prioritize a little higher saving than maybe if your income was coming from something else. So anyways, that's my 2 cents. That's February month in review. I hope you've enjoyed it. As always, take it slow. Trading is risky and my results are not typical. So I encourage you to trade in a simulator before you put real money on the line. I hope you do check out some of the other videos that I have posted on YouTube. The 2 days in February that were the really hot days. You should check out both of those and make sure you subscribe to the channel so you get the notification when I go live for the Day Trading Morning Show. And as always, I'll be streaming first thing tomorrow morning. So I'll start streaming anytime between 8 and 9. So make sure you're subscribed so you get the notification when I go live. All right, thanks so much. Let's see you guys for the next episode. And that right there was an entire video with no ads. I don't monetize my YouTube channel with video ads, which means you guys get to enjoy the content. But do me a favor, please hit that subscribe button and give me a thumbs up and let YouTube know that this channel is the channel to watch if you want to learn about day trading.